to solve something specifically to distribution as it relates to insurance?
Yeah, I think, what I learned at McKinsey is you got to be super rigorous about how you define the problem. And so we've always been very rigorous how we define the problem. And if you take a look at the consumer side of insurance, the problem for, to me was not product per se in terms of like the underlying financial asset and how you create life insurance policies or property insurance policies. There are product problems, but even if you solve a product problem, you have a distribution problem, right? And if you poll 100 CEOs in the insurance sector, what their number one pressing thing is, it's distribution, right? How to find growth, how to keep growth going at a profitable clip. So for us, distribution made sense, right? Because if we were to go carrier first, which some folks are doing, you're going to have a distribution problem, right? And you're going to go up against, unless you're innovating in a completely new category, you're going to go up against incumbents who have $1 billion of advertising budgets and just a lot of brand affinity and brand awareness that a new carrier wouldn't do, right? So in our approach to the problem, distribution first, product if it makes sense, and that was the burning platform, and it still is for the industry. And talk to any new startup, like what's their biggest concern? Distribution, how to get more customers, how to figure out this particularly friction-driven funnel in a way that makes sense for your company.
If we fast forward 10 years, I mean, what is your perspective of distribution? What does it look like? Is there anything that you could provide the audience from what you've learned and where you are with your business?
On the consumer side, I think distribution is going to look a lot like wealth management and retirement, because that's an industry that basically has a 10-year head start in terms of thinking about the consumer and thinking about digital and thinking about digitally native plays, right? Like if you think about what Schwab did, what the robo-advisors from the last few years have done. So the market's basically segmented. You're always going to have a segment of consumers who are either high touch or high net worth that want that in-person relationship where the economics make sense to have an in-person relationship with an advisor or an agent. And then you're going to have a whole bunch of, it's a bigger segment of do-it-yourself consumers, right, who don't want to talk to somebody on the phone, who are digital natives, who want to do it. And that's what it's going to look like on the consumer side in 10 years, and it's going to look a lot like what wealth management does now.
How about on the small business side, Rashmi?
Yeah, I think you see something similar where you have, new business, a high percentage of new businesses more and more are going to go online to purchase. Of course, you're going to have the folks, like the inertia on the folks that are already working with their, relationship-based agent not churning off. But I think you're more and more going to see agents realize that they should be adopting very similar actually to robo-advising, right? You have the big institutions actually adopting a lot of the platforms that are working because they realize it's a cheaper way to do the servicing themselves. So I think eventually a very high percentage of this gets online either from a distribution perspective, first-time acquisition, or from servicing, because the truth is using technology in a do-it-yourself way is it's actually better for the customer experience and it's better economically for everybody,
Small businesses are chronically underserved. In all of their economics, it's all about customer acquisition, and they're just very expensive to get to. And the thing that I saw, and I think is borne out a lot, is you basically look at business owners that are under 35 and business owners that are over 40, and there's kind of a mix in the middle. But basically, if you're under 35, you think about buying products like buying a plane ticket, like going to Kayak, doing it online, putting in a credit card. If it goes wrong, you definitely want to be able to call. You want somebody to pick up on the first or second ring. If you're 40 or older, maybe you prefer the really high touch model. You want somebody to call all the time. You don't really care if it's self-service or not. And so, my experience 8 years ago when I was starting this other company, it was I was in this world where everything was the old model. And nobody had built the new one yet. And so, I think the underlying products that businesses are buying, which, the payroll processing, the insurance products, the 401k, I think there are improvements to be made there, and we're definitely pushing the envelope, but really it is about the delivery and getting those things in people's hands in the way that just kind of makes sense to them. So it's pretty similar.
David, it seems like these, the gig economy and the Ubers of the world are in the news quite a bit, and 1099 kind of workers are a new target market segment for insurance technology products. Is that something that interests you? And if so, kind of what are your thoughts on the gig economy as it relates to insurance technology product?
Sure. I think anytime you have a new industry or segment or business model, there's ancillary products that can build upon that platform, and the gig economy, freelance economy, similar but not completely, bring along those opportunities, right? So, we've made some investments in the space, and we're looking at a bit of a broader level. But I think there's multiple opportunities, right? There's ways to take current products and just move them to new industries. And then there's ways to create new products that are specifically focused on these new segments or business models. And then there's same products, but just better underlying data or customer experience to get that product out to market. I think the hardest part for us as an investor is where do we focus, right? I think as you see, there are just so many areas in this massive market to go after. It's on us to figure out where those best opportunities are.
Do you think there's specific areas that might be overhyped as it relates to insurance technology?
I'd actually say no. And I'm sure there are some where there's a little bit of overinvestment, but I'd say compared to some other sectors, insurance is still a bit unsexy, right? Whereas some other industries have every Wall Street person, HBS alum kind of coming out and say, hey, I can create a startup here. I think it takes someone who really understands either the industry or their customer or a certain pain point to really attack insurance, right? I don't think this is an industry that can be taken lightly and also one that's harder to bootstrap. So I think you get a higher quality of startup that's attacking it.
Why did it take so long for insurance technology to be more innovative?
I can start on that one because I did a lot of work in those other sectors at McKinsey, and I think they had a burning platform sooner, right? If you look at the economics in banking, in lending, in wealth versus insurance, they're much, much tighter, and you've got much tighter margins in those sectors than you do on insurance, right? So the insurance company was like, we don't need to do anything, right? Our unit economics are good. We're so big in terms of our balance sheet, like we don't need to worry about it, which wasn't the case in those sectors, right? So I think that's why you saw innovation sooner than you did in insurance, and it was just, insurance was the final frontier after payments, lending, banking, wealth, and there was really nowhere else to go in financial services after that.
The incumbents are still doing pretty well, right? Compared to an industry like retailers where they are scraping for any kind of answers. Here they're doing pretty well, and there's a high cost of capital for anybody to come in there and really try and disrupt.
You talked about the more mature companies, the incumbents. They've got strong brands, strong balance sheets. They've got these, a lot of strengths and capabilities. What is their role kind of in the future in insurance? Who wants to take a stab at that one?
I think you'll always have, all three of us are really in the distribution side, right? So we're very much reliant on the incumbents for actually taking the risk. And I think you have to be a large company with a certain balance sheet in order to do that. And I mean, the truth is, when we talk about the incumbents from a carrier perspective, at least on the small commercial side, they gave away the customer a long time ago. They're not really directly competing with us. I think in 3 or 5 years, you're going to see those carriers go direct with customers. But even right now, I think they recognize that the DNA that they need as a company in order to win digital distribution is not what they do well, right? What they do well is underwrite risk and pay claims. And so, I mean, I think there's a role for that to continue on.